Welcome back to Wealth Wednesdays. My name is Janine Rogan and I am the CEO of the Wealth Building Academy. And this week on Wealth Wednesdays, we are going to be talking about recession-proofing your finances. Now, we've all seen the increase in interest rates and the increase of inflation over the past year, and that means that a lot of Canadians are struggling to make all of their payments and purchase all of the things they need on a monthly basis. With the cost of food and many goods and services skyrocketing over the last year, you may feel like you don't have a lot of options, but we may still see more of a recession come, so it's important, if you can, to prepare yourself for a recession. If you do have debt that is costing you a lot of money, it may make sense to leverage some of your savings and actually pay down that debt, or get really focused on diverting some of the amount you would monthly contribute to your savings to paying down your debt. If you have high interest debt or debt that's costing you a lot on a monthly basis, it may make sense for you to pull some money out of your savings account and actually pay down some of this debt so that it is less of a burden to you. Decreasing your overall costs on a monthly basis is going to help you financially to feel more secure, as you will have less obligations on a monthly basis. If you don't have an emergency fund set up, now is the perfect time to start one, and you can start one with as little as $10 or $20 or even $50 a week or a month. And while this doesn't seem like a lot of money, you will see that this money will start to grow, especially if you're leveraging a high interest savings account and earning over 5% to build that emergency fund. This will help you sleep better at night, knowing that you have some money put away for emergencies should the worst happen. Another thing you can do is make sure that you negotiate all of your variable costs per month. So call your cell phone company, call any subscriptions that you pay for, or email them and see if they can give you a lower rate for a period of time so that you're able to actually decrease the amount you owe on a monthly basis, or you can actually even just cancel these subscriptions if you're not using them to their full extent. A great example is online newspaper subscriptions. I recently was looking to cancel one because I felt like it was incredibly expensive, and I was able to negotiate down a rate for the next 6 months that is only a couple of dollars a month, and then making sure that you've set up a calendar reminder so that you review that again when the time has come for that promotional period to end. Last but not least, we are starting to see the stock market go back up, so if you can continue to invest, even if it's $25 a month, continue to put money away and build that habit so that you do have a nest egg to fall back on as you continue to grow your wealth within the current climate. One other thing to note that isn't really finance related, but it is also important in times like this, to make sure that your resume is up to date and that you are understanding what jobs are out there and what the compensation would be for those different roles. Should you lose your job, you'll be ready to go and be able to start searching for the next career move that you will be able to leverage in making sure that your financial situation stays whole. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. And if you have any questions or comments about recession-proofing your finances, you can leave them in the comment section below, and I will see you next week.